Hello, welcome to another video tutorial with Kukura Capital. This is our first episode of our Bollinger Bands series, and it's a very short series, and it's about Bollinger Bands, which are absolutely great and possibly one of my favorite indicators. So I'm really excited to do this video tutorial. There's literally a library that can be filled with all information about Bollinger Bands. So I am going to be honest, it is quite hard to condense everything, but I have simplified it and made it relevant to how you can apply it to your trading strategy. If you do want to know more about Bollinger Bands and the formulas that go in it, we do filter a lot of this stuff out in our PowerPoints and our presentations, just because most people aren't interested, because obviously the calculations are quite complex. But if you are interested, you can just drop a message on our forum or email us, and we will be more than willing to share notes and information on how they are calculated. Now, it is actually interesting, depending on how much you want to develop your trading skill, it is good to know how some of these things are calculated if you ever want to build your own indicators or your own algorithms, just to have a good understanding of what calculations go behind these indicators is great. Later along the line in the year, we will be doing a video tutorial on algorithm trading and how to also build your own indicators, because I also have a personal interest in learning how these indicators are built, and it's actually simpler than you think, but that's something that we'll be doing down the line when we know for sure people are no longer completely new and starting with this trading. Anyways, to get back on topic, Bollinger Bands are great. They basically indicate to you the price volatility, and they basically are built upon and designed around moving averages. However, they're slightly more complex. Instead of being based on the average of your closing price, it's based on the moving averages median. So it's based on the average of your moving average. Isn't that amazing? And there's a lot of ways that you can apply Bollinger Bands, not moving averages, sorry about that. So the way that you insert these wonderful things, you just go to insert. They are a trend indicator, so you go to your indicators, then you go to trend, and then you'll see Bollinger Bands. And then you can leave the period as it is, and the deviation, the color is really up to you, whatever floats your boat. I'm just going to go for purple, then we're going to press OK, and there you go. I'm just going to close my market watch and my navigator, just so that and also my terminal, just so that you can have a better view of what's happening. Actually, I should make these lines much thicker just so they're more visible. So there we have our Bollinger Bands. I hope they're clear enough. Should I choose a brighter color? Okay, let me choose a brighter color, just so everyone can see really well. So I chose this lime green, which I don't know if it's any better, but anyways. So basically, for the interpretation of Bollinger Bands, you can view them to be like support and resistance, which is pretty standard, and I can't think of any other way. Well, there are other ways, but I can't think of any other simpler way to apply your Bollinger Bands. So I'm just going to focus on interpreting them regarding them as support and resistance, and then the second way is going to be interpreting the Bollinger Squeeze, which is a really famous thing because a lot of strategies are based on that particular squeeze. So in terms of your interpretation of Bollinger Bands, you have three lines: your upper one, your middle one, and the bottom one. So as I mentioned, you can regard it to be like support and resistance. Your top line is definitely your resistance, and your bottom line is your support. So you don't expect your price action to break that support, and as you can see here, it's very rare. But where you do see these spikes, that's for those who are familiar with that. So, some people just trade on that. That's a good indication normally of a reversal. Those are good. Those are really good entry points. Here you would have gone long, done a long position. Here as well. When you get these large spikes, it's an indication of a reversal. When it's at the top, it's an indication that you're getting a reverse. But it's the same thing regardless of if you get spikes or not. If you have done our candlestick analysis series, if you have watched it, you are very familiar with why these spikes are so good. It means that you're getting either your buyers or sellers are tied. In this case, it is definitely your sellers are tied and the buyers literally just pushed up the price, which is, I mean, such a wick like this that literally cuts at the bottom of your Bollinger Band is something to watch out for. This is a very good, if you see this on your chart, that's normally like a very good indication that there's a profit to be made. In this case, we're on our 1 hour time frame. If we're also gonna do one video tutorial of Bollinger Bands just on IQ options, and the reason is because I think they work very well for IQ options. And I mean, there are so many video tutorials of people going from $10 to $100 in just about under 30 minutes using Bollinger Bands with IQ options. So that's also something to consider, and the approach is definitely the same. So in this case, what happens if you're using a support and resistance approach to your Bollinger Bands, when you have your candles at the top of your Bollinger Bands, you will place a sell. Anything at the top, near the top of your Bollinger Bands, is a place for sell, 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 sell. It's a sell signal. Now you're expecting your price to go down. Now the great thing with Bollinger Bands, it's really straightforward when you want to put a stop loss and a take profit. If you're doing a sell, you would place your stop loss above this Bollinger Band by about 10-20 pips, obviously depending on where you are entering. In this instance, you would put it about 10-20 pips from your wick, and obviously above that would be your stop loss. Your take profit, ideally you'd set 2 take profits, so you'd enter 2 trades normally in the case of Bollinger Bands, or you'd use your trailing stop really wisely. You can place a take profit here, or you could place a take profit here. These would be your targets for taking profit, and you can, as I mentioned, place 2 trades, both with different take profits. So I'm just going to put a little bit of writing on this, just so if you're watching you can follow what's happening. So I just placed some text just to guide you. If you are going with a short position, which is sell, you are definitely going to place your stop loss above the first Bollinger Band, the top Bollinger Band, and then you're going to set your take profit, the first take profit, at the middle of the band, which would be about here, and you'd set your second take profit at the bottom of the Bollinger Band. So now let's just go through our chart and see how wonderful our Bollinger Bands actually are. So the first place obviously is here, where you see that your candlesticks are not just at the top, they're literally breaking the top of your Bollinger Band. So you would probably place a short here, and you would have your target at the middle, and as you can see, it is hit. It's yeah, that's a lot of money. That's 5,500 points, which is about 550 pips. Obviously trading at 0.1 volume, that's 550 rand. If you're trading at 1 volume, that's 10 rand a pip, that's about 5,500. So easy cash. And then you can see it, well, not easy, let me clarify, it is not easy. I have been trading and practicing how to trade. I actually have a journal somewhere. When I started on the 28th of September of 2015, 2 years ago. Not last year, I started the year before. I was obviously, my first trading experience was not with Forex, it was with stocks, but obviously the application is the same, but I didn't know as much, and I obviously became better with time. So don't think that overnight, don't think you're just gonna become a master at this. You do need to practice, and obviously for me, I have been doing this for some time now. I do have a good eye, I do pick up reversals without even drawing anything. I can just see from my chart analysis, okay, this point is a strong, reversal point because of support and resistance. But nevertheless, don't worry, practice and continue to watch our video tutorials, read our PowerPoints, and read the notes. And the thing that happens a lot with beginners is that you see a lot of indicators and you think they're all fantastic and you want to use all of them. That's not the case. Choose what you think works best for you. And also, with that being said, I also recommend that you choose something that you're comfortable with, that you really understand, that if you're able to explain to somebody else, that's normally a good indication that it's a good indicator for you to use and to recommend to other people. Now in this example, we're using the US dollar South African rand 1 hour chart. And I do have to say, undoubtedly, that the US dollar, South African rand, is one of the most difficult currency pairs to trade because of how it is. I mean, it ranges quite a bit and it's very volatile. And unfortunately, it's not a fault of either economy. It's been victim to a lot of manipulation from big banks and a lot of bankers. I mean, there's a whole scandal about it. So I do use them. I do use this currency pair a lot in the examples, just because I know people are familiar with it. And in some places, I can just indicate, okay, this was like the Sona debate, and that's why the price dropped, or something like that, because you are familiar with the currency pair. And also, it's just basically because of that, if I have to mention the fundamental analysis. But also, I must mention and highlight that it's better to stick with the major currency pairs like the Euro USD, the Great British Pound, and the dollar. Those currency pairs are much better to trade because they trend better and more people are trading them, so they're moving quite frequently. And these smaller currency pairs, unfortunately, are victim to, manipulation. So let's now evaluate what we said. When you have it at the top, you see, once again, another example right here. You identify that you have candles at the top of your Bollinger Band, so you would place a stop loss around here, and then you would place your take. This is for a short position, and then you would place your take profit for the middle, and then and then you'd also okay, this chart, and then you'd also place a second take profit at the lower bound, and as you can see, it did hit. So the other obviously the alternative interpretation of this, when it's at the bottom, you're going to put a long position, so you use the same approach. However, your stop loss is going to be at the bottom of your Bollinger Band. So in this case, you'd put your stop loss around here. I'm just going to draw a line, a stop loss around here for a long position, and then you'd place your take profit also at the middle, your first take profit, and as you can see, it did hit. And then you place another take profit at the third Bollinger Band. So you are placing about 2 trades with Bollinger Bands, because you can be one of those people who's like, I'm not even going to go for the second one, I'm just going to go for the third one. It will hit. Well, it's supposed to hit. That's the strategy. So this is just episode 1. We will have a second episode when we do go over this, and also we'll be interpreting the Bollinger Band squeeze, which is actually a very familiar, very famous interpretation of trading using Bollinger Bands. Thank you for watching. If you are watching on YouTube, don't forget to subscribe and like our video tutorial. If you do have any questions, any concerns, do visit us at kukuacapital.co.za. Thank you for watching.